Hi, folks. Welcome back to Murthy Finance Academy. Today, we're diving into the complex and, let's be honest, incredibly lucrative world of India's alcohol market. It's a landscape just filled with massive opportunity, but also some really unique challenges. So, to get a handle on the complexity right away, just look at this. It's the exact same bottle of whiskey, but it costs nearly 3 times more in Karnataka than it does in Goa. Now, this has nothing to do with shipping costs. It's a perfect example of how different state regulations essentially create dozens of little mini markets all within one country. And even with this crazy patchwork of rules, the sheer scale is, well, it's staggering. We're talking about roughly 3 crore. That's 30 million bottles of alcohol being consumed every single day. For any investor, that kind of volume spells a massive, undeniable opportunity. So here's our game plan for today. We're going to start with the single biggest trend that's reshaping this whole industry, something called premiumization. Then we'll zoom in on the key players and their different strategies, look at the big risks you need to know about, and finally, we'll wrap it all up with a clear investor scorecard.
You know, what's really fascinating about this market right now isn't just that it's growing, but how it's growing. We're in the middle of a fundamental gold rush, but it's a rush towards premium products.
And that trend is called premiumization. So what is it? Well, it's basically a major shift where people are moving away from just drinking more to wanting to drink better. It's all about the experience, the brand, the quality, not just the quantity. And this chart, wow, it just shows you the raw economic power of that shift. Take a look. The mass market stuff, what's called Indian-made Indian liquor, makes up more than half the volume sold, but it's only 14% of the total money spent. Meanwhile, the premium Indian-made foreign liquor segment, it snags a whopping 86% of the value from less than half the volume. As an investor, it's pretty clear where the real money is being made.
And this focus on premium brands has a direct and really powerful effect on the companies themselves. You can see it right here in what's called realization per case. That's just how much money a company makes on a standard case of their product. Over the last 5 years, you can see both United Spirits and Radico Khaitan have pushed this number way up. And they're not just selling more, they're selling a richer, more expensive mix. This is premiumization hitting the bottom line, plain and simple. So the big question is, how are the top companies actually trying to cash in on this premiumization wave? Let's break down the different playbooks of 3 of the key players. At a high level, you've got 3 totally different approaches. Radico Khaitan is all about owning the process from top to bottom, what we call vertical integration, to control their costs. Then you have United Spirits, which is backed by the global giant Diageo, and their game is all about curating this amazing portfolio of premium brands. And finally, Tilnagar Industries is playing a smart game of buying up brands to build scale and distribution muscle really, really fast.
Let's dig into how these strategies create a long-term defense. Radico's whole thing is controlling its supply chain by making its own extra neutral alcohol, or ENA, which is the main ingredient in spirits. It gets a huge cost advantage. But more importantly, when grain prices are going crazy, this shields them, giving them a level of margin stability that their competitors just don't have. Tilnagar's path is different. By buying a huge brand like Imperial Blue, they instantly get massive scale. This makes their whole distribution network stronger, kind of like building a superhighway they can use to launch their own premium brands down the road. But, even the smartest strategies can get thrown off course. So let's pivot to one of the most important things for any investor in this space, that unavoidable web of risks and regulations.
Right, so like we saw with that Karnataka and Goa price difference, the states really do call all the shots. And the main battleground is distribution, which basically falls into 3 different models. The biggest one, covering over 60% of the market, is where the state government is the only wholesaler. Then you have auction markets, where private companies bid for licenses. And finally, you have the open market, which is the smallest piece, where companies have the most freedom.
And these models aren't just details. They have a real bottom-line impact on a company's finances. See, when you sell to a state-run corporation, you get paid faster and don't have to manage a complicated supply chain. That means less money tied up in inventory and a shorter working capital cycle. In an open market, you get more control over your brand, but it also means more of your own cash is tied up in running the business. A company's strength often comes down to how well it manages this mix. And as if the state-level stuff wasn't enough, there's a new risk on the horizon, and this one hits the premium segment directly. A recent trade deal with the EU has slashed import tariffs. So what does that mean? It means all those famous global brands, especially Scotch whiskey, are about to get cheaper. They're going to start competing way more aggressively on price, putting real pressure on the very same domestic premium brands we've been talking about. Okay, so looking past the immediate risks, there are two huge trends that could really redefine this whole industry over the next 10 years.
The first one is a potential threat to the entire spirits category. For younger drinkers, alcohol seems to be less of a daily thing and more about the experience at a social event. This whole drink less but drink better idea often leads them towards wine or craft beer, which, over the long term, could start to chip away at the dominance and the juicy high margins of hard spirits.
But pushing back against that threat is this absolutely phenomenal opportunity. For decades, India has just been a massive consumer of spirits, but now it's becoming a globally celebrated creator. Indian single malts like Radico's Rampur and also Indri are winning the biggest international awards, proving that India can go toe-to-toe with the best in the world. This is the long-term story of India as a creator. All right, let's pull all these threads together. At the end of the day, how do we turn all this analysis into a smart investment thesis? It's time to build our final scorecard. First, let's talk about what to watch. For a company like Radico, which has built its story on premiumization and owning its supply chain, you can't just look at profit. These are the 3 numbers to check every single quarter. Prestige and above volume growth tells you if they're selling more of the good stuff. The realization per case trend shows if they're getting better prices. And any talk about their own E&A production confirms that structural cost advantage we talked about. And so here it is, our final scorecard, rating each player on the big structural questions. When it comes to defending against volatile margins, Radico's own E&A production and United Spirits' super premium product mix get them a high rating. For resilience against regulatory shocks, United Spirits' high-end brands give them a strong buffer. And for that long-term creator story, both Radico and United Spirits have strong, world-class single malts in their corner. Which really leaves us with the final and most essential question for you as a potential investor. In a market this complicated but also this rewarding, which of these core strategies do you believe offers the most durable, most resilient path to creating long-term value? Is it the safety of owning your own manufacturing, the power of curating global brands, or the sheer might of having massive scale and distribution? The answer to that will probably decide who wins in the decade to come. If you like the video, please do like, share, and subscribe to Murthy Finance Academy.